What is up everyone, we're back with episode 5 where we're gonna go from unprofitable to profitable. We're gonna do again a trade recap. We took 1 loss, 1 win and 1 break even. So we're gonna go through these trades and we're gonna analyze what we did wrong. So let's get right into it. So after we took a loss on Tuesday, I managed to take 2 trades yesterday on Friday. Actually managed to get 1 break even and even take a loss. And we managed to get into take profit from a trade which we entered last week. So anyway, let's get into it. So the first trade was on silver. We had on the daily time frame this small liquidity void which we had here, as well this fair value gap in between. So I saw that the market was kind of reacting pretty good from there, and we had this opposing 4-hour fair value gap, which was dangerous as it was acting as a trapped order flow. It was important to stay patient here, and yeah, what I did, so I dropped down into the 1-hour time frame and I was looking that we run this 4-hour rejection high with 2 candles. Now what do we see? The first candle ran the rejection high. Now since I've taken a lot of losses, and I was talking about it last week with these rejection highs, I always want to see 2 candles running the rejection high, and we can see that this candle closed above this previous candle size. So for me, this is the point where I would like to enter, and yeah, I just did a market entry, stop loss under this low, because I did not think that we're gonna go below this 1-hour fair value gap. If it does, well then it is how it is. Now the second problem that occurs with this trade is that we have our context high in the way. There is kind of a long way from this context high to our take profit. So what we're gonna do is, when we reach this context high, we're just gonna put a stop loss to break even. Now as soon as we entered, market started to consolidate a bit, but as you can see, as soon as New York opened, we pushed to the upside, and yeah, we were actually pretty close to take profit here. Of course, I went break even as soon as we reached this context high. Yeah, so what you see next is just an unlucky thing. Market went straight down, pumped straight down, took us out on break even, so we did not take any loss. But yeah, I mean, we were so close to take profit, and that's what happened last week as well on our platinum trade and gold trade. We were so close to take profit, and the market decided to just go back again. Now of course, after we've taken this context high, that's a thing that can happen, but you'll see that the same thing happened on gold, and it was a really strange movement of the market, but we'll get into it later. Especially gold was moving really strange, like really strange. We had all these bullish arguments, this weekly fair value gap, then this daily fair value gap, and another daily fair value gap where we could move higher from, but you can see all these long wicks. I mentioned it in the last video where we took the loss on gold. So we had this 4-hour fair value gap with this rejection high here, and every time we would reach this area, the market would just immediately go straight back down. You can see that we managed to get back up again, and this was even yesterday, and then you can see the next candle just boom. It's like that there is some big institutions just trying to push the price lower here in this range. Gold was pretty consolidating. It wanted to move higher, but it just couldn't. So we had this new rejection high of this original 4-hour rejection high. So we had 2 rejection highs, and we wanted to run this rejection high. So looking into the 15-minute time frame, this was the high that we wanted to run. Now we can see that we get this rejection high, and we immediately run it in the 15-minute time frame. That's the time frame which I want to go the lowest. I don't want to go lower than the 15 minutes. Well, now basically again, I want to see 2 candles running the rejection high, and we've done it with this candle. So what I did, I immediately bought. I put my stop loss below this low here, because I did not think that we're gonna go lower off the 15-minute fair value gap here. So when I went long in this trade, I was already fine with it if I take a loss, because I knew we have December, it's the end of the year, you can play a bit more with the risk, so you can collect data and then analyze the data for next year. So I was totally fine with taking a loss. But what happened is, it was just such a strange market movement, and it happened at the same time, at the time where we got stopped out on break even on silver. So it was just a strange thing. Like, the market again went up like the past few days when we reached these rejection highs of the 4-hour, and you can see here as well, we reached this rejection high and even ran these highs, went higher, but then just dumped down. And that's the thing, and that's the same thing that happens here. Now the first candle here already took us out, so I thought, okay, maybe I should have put my stop loss on this low here, because this was the recent order flow leg low. But what you see next is the next candle just crashing down. Now the thing is, we did not even have news. We didn't have any news on this time. What I basically think is that at the moment we're kind of having the problem with the December price action, and because I had these problems last year as well. In other words, last year you could not even take a trade since it was so much consolidation, there was no entry possible. I have the same feeling that it is happening now with gold. It started to consolidate at the beginning now of the month, like on this week it started to consolidate, because last week we were moving to take profit, so I thought, okay, this week we're gonna reach these highs, maybe all-time highs, and then the market will start to consolidate because we've reached all-time highs. I remember that I read some news on the beginning of the week, I think on Tuesday, Wednesday maybe, that investors were actually booking their profits in, and after that I remember, I don't know if it was on Tuesday or on Wednesday, but like this was the time where gold started to dip. So yeah, maybe it has something to do with that, but yeah, it was just such a strong reaction, but it wasn't on all commodities, like on gold, platinum, on silver. Like for me, who's only trading technical analysis, this is maybe a thing that now came in my way. The trade idea was valid, it was exactly like in my trading plan. Maybe the stop loss placement should have been better, but as you can see here, we would have gotten stopped out anyway. So let's just move on to our win, which we took. We entered this trade last week, or maybe even 2 weeks ago, I don't remember. Yeah, we had this bullish bias, this weekly fair value gap pushing up higher. Yeah, just going for the all-time highs. If we go into the daily time frame, what do we see? We have this daily fair value gap pushing up higher, and we've got this daily fair value gap trapping us. So what we're gonna have to wait is we need a reaction from the market that we want to go higher, and then we invalidate this trapped order flow. Now going into the 4 hour, we want to run this rejection high with 2 candles so that we're showing buying potential and that we can be 100% sure that the market won't reverse. Now we can see we get the run with 2 candles, so now I would immediately put in my entry. Now this happened at midnight, so I was not able to enter the trades immediately. I managed to do that in the morning, so, and I entered when this new candle then closed at 8 o'clock. So I've put my stop loss below this fair value gap, this last fair value gap, which could act as a resistance, and take profit would just be a 2RR. So now is the thing where I'm gonna have to be honest with you. So I took the entry here. The market had a beautiful reaction, but it reversed down. Now, I went break even, of course, when we reached this context high, and everything was fine, but the market just decided to dip. What happened yesterday is that, so I saw, okay, the market is starting to reach for these highs again. So as soon as I saw that we were so close to take profit, I exited the trade. Now, of course, you would say this is not a good thing. You should stick to your trading plan. Now let me tell you one thing, is that I could not risk 1% on this trade. Why? So since I'm using a swing account on FTMO, I can only have a leverage up to 30, so I can have a higher leverage. So I had to enter with a lot size of 0.01, so the smallest lot size, and when putting my stop loss here, I was risking 1.2%, so my take profit was at 2.5. When we were at this level here on Friday, we were up 2% on the account, and that's when I decided, okay, I'm just gonna play the safe one here. I want to get out, just take in the profits that we have, and I actually think this was one of the best decisions which I've made, because you can see then the market dumped again. This is what happened then on Friday yesterday, where the market just randomly dumped. It could have been that if we reacted from this high, which has a big rejection wick. I don't know where it came from. Yeah, just a really strange week, but yeah, it's probably just the December price action, which we have to get used to. It's only gonna be another 3 weeks of this price action, so yeah, just gonna collect the data. So this means that for the rest of the months, we're gonna be a bit more cautious. We are gonna take only high probability trades. I'm already seeing a lot of progress from these last weeks, so yeah, if you don't mind to support me, you can subscribe to the channel. And yeah, with that being said, this was episode number 5, and we'll see ourselves in the next one. Thank you.